All right, welcome to the Global X YouTube channel for a live YouTube stream and a live Reddit between Global X and Questrade. I'm Jon Erlichman.
And I'm Hwan Kim.
Good to see you.
Thank you for having me. I'm so excited to be here with you guys.
We're excited to be doing this. You know, it's still early in our live streams, but we've been having a lot of fun answering questions in recent months on Reddit, and more recently on Reddit and YouTube Live. And the focus today is on investing right here at home in Canada, and anything Canada related. And we're taking all sorts of questions, whether it's on the investing landscape in Canada, whether it's the Canadian economy, whether it's the dynamics that make up this market. So pretty excited about it.
Yeah, I mean, lots of great questions already rolling in.
And obviously a very interesting time in the markets, a lot of big questions on everything from stocks to crypto and even to just getting started. Now, as way of context for anyone who is joining us live, I'm Jon Erlichman. I've been covering the stock market for 25 years, and you might see me on this YouTube channel from time to time. I do the Market Moves segment where we talk about some of the big themes in the market. We do great interviews. If you're not a subscriber to the Global X YouTube channel, hit that subscribe button.
And I'm Hwan Kim. I'm Chief Product Officer for Questrade. So I'm responsible for all our product vision and product direction. So to make sure that we're building products that actually matter to a lot of our customers.
You know, when I was thinking about some of the topics that come up with investing today, Hwan, yes, people want to know about the investing dynamics, but certainly they want to know about how to begin investing, the tools they can use, and then how you're keeping tabs on the market, learning about new themes in the market, executing trades, watching your portfolio grow, because everything today really is at your fingertips through your phone. So this whole theme of do-it-yourself investing, that's something that, you know, Global X is obviously big in that world through the boom in ETFs, but it's core to what you guys do at Questrade as well.
Absolutely. I mean, this year certainly has been almost the second peak of do-it-yourself investing, probably since the pandemic. Given with all the volatility in the market, we're getting lots of interest from our customers to really take control of their destiny, right, as they invest. And consistently, as we talk to our customers, we hear that they really care a lot about how to level up their investing game, how to optimize their performance. So a lot of these things, I think, also become really valuable to us as we ingest them to think about how do we actually make products that actually helps you do these things better.
Right. Well, we'll get some feedback live. It's always a little nervous doing things live. You never know what you're going to get, but it's going to be fun. And I think it's great that people are asking questions. We can already see that people have been going to our Reddit to ask those questions. By the way, if you're curious to ask a question before we officially get started here, just a reminder that the link to ask questions, go.globalx.ca/AMA, which you might see on the YouTube channel here in the top right corner. But if you go into the description, you can go to Reddit, you can ask a question, we will answer your question, and that's pretty much the way it goes. You're the product guy, so you know how all the bells and whistles come together. I just like to talk. But you know, I think the other thing we're going to be doing is trying to get some feedback from people on how they invest. And so another link I'm just going to share with everybody as we get started. Welcome, by the way. We are asking a poll question about the kind of investor you might be or the kind of investments you might be interested in right now. So our poll is go.globalx.ca/poll, and there is a link, by the way, in the YouTube description as well. So I really wanted to get a sense from people on what kind of investing they're interested in: growth investing, income investing, crypto investing. All of these areas are obviously of deep interest to a lot of people right now. Yeah, and so, and just out of curiosity, like you're measuring, I would imagine, in real time on your platform, the same way that, you know, like ETF providers are trying to cater to investors as well these days.
Yeah, I mean, we're definitely seeing a lot of uptick in growth investing this year, given the volatility, right? So even the trading activities, people trying out options, trying out different asset classes are definitely going up, which I think is a really good thing for, you know, customers who are really trying to take control and being able to really navigate. And when you couple that with, you know, what you do, John, which is giving great information about the stock market. I think those things can really amplify to lead to pretty great results.
Well, we've got a Team Canada approach today because this is all about investing in the Canadian landscape, and some of this will come up this hour, but I mean, there are a lot of specific differences about the Canadian market, the makeup of the market, what you're getting into, and so we want to go to our first question because we've got a lot of them. Thank you so much for people going to Reddit, asking those questions, and coming here live on YouTube for the answers. We got one question from Opposite Swimming 7398. And the question was, what is your best tip for young investors who are looking to build wealth? They also ask, typically young investors are told to invest in growth stocks, ETFs, etc. Do you hold that same opinion? Any additional tips? It's an amazing question. A friendly reminder to everybody today that this is not financial advice, but this is the kind of question that I get a lot from people. You know, there's two worlds. There's the world of people who are deeply intimate with investing, and there are people who are learning about investing and just wondering about how to get started. I think one thing that I've heard from experts over the years that's pretty consistent is that you should start. I know your friend might be doing this, or your uncle might be doing that, but it is important to try to figure out what you're trying to achieve, who you are. Again, not financial advice, but that is a starting point, because like the goals of what people are looking to achieve are paramount when it comes to actually putting money to work and the expectations around that. But I think that person asking the question about younger people typically being told to invest in growth stocks has something to do with the amount of time that they have, the time horizon, and the risk that you can take in theory, at a younger age, when you're looking to grow capital versus protect your capital. But where do you weigh in on some of that?
I mean, I think it's a nail on the head. It all depends on what you're investing for, right? So if you're investing for a very long horizon, like your retirement, right, then maybe your risk appetite could be greater on those. But if you're trying to, I don't know, buy a car, buy a house in the next couple of years, probably, or trying to go to vacation using invested funds, probably not the best idea to take enormous amount of risks. Again, I think it all comes down to individuals about their risk appetite as well as their risk capacity, how much risk you can take. With that said, I do think there are some, again, we're not trying to provide financial advice, but there are probably some good ground rules of what people could do. Like eliminate high interest debt, like carrying a credit card interest debt, right, which it would charge about 20% APR every year. That's probably not the best way to manage your finance if you so, because no amount of investing will actually be able to catch up to that rate of those interests growing. Being able to save in the right emergency funds, right? I think there are some basic things that are probably a good financial management practices. It's one of the reasons why some of you may know, that's why we're becoming a bank, because we also do know that cash flow management is also a very critical element in terms of building your wealth, not just your investing. So that's one of those things we're looking to solve over the next year.
Well, like going back to our poll question, which people can weigh into, and we've got a link in the description. I'm curious to know how many people want to know more about growth investing versus income investing. The thing is that we are in a bull market right now.
Absolutely.
And the reality is that there are growth stocks that are moving quite a lot. Obviously, there's a lot of activity on a platform like Questrade. There's been a growing amount of interest in the ETF world around growth names as well. And yet, at the end of the day, when you are not in a bull market, growth stocks do tend to behave differently.
Absolutely.
I started my career during the dot-com boom, and so that makes me an old man. But at the time there was a huge interest, and as the dynamics of the market changed, what people prioritize changed too. So kind of going back to the start of that question, which was a great one, knowing who you are, what your own tolerances are, is really important. We have another question. Should we get to it, Juan?
Let's get to it.
Okay. This one comes from Craig Hoxton. And Craig says, I keep hearing about private assets as an investment class. If they're, quote, private, how can investors do their due diligence beforehand? And then a follow part to this question. typically what kinds of things should an ETF investor consider before choosing a fund? Everyone has a TSX ETF. What kind of differentiators are worth considering? So some good stuff there. Let's start with the private asset part of that question, I think, because we've heard a lot about that probably over the last 5 years.
Yeah.
I'd say the last decade, but it does feel like, especially with the ETF boom and the ability for people to get access to so many different specifics, there's been a growing conversation around, like, can I get access to everything from private credit to companies that might be earlier stage but aren't on the public market. Actually, I've got on my YouTube channel, Ticker Take, brought to you by Global X. We are doing a video that's coming out tomorrow, Thursday, about investing in space.
Yeah, space.
And like, there's tons of publicly traded space stocks, but one of the people we talked to runs a private fund, and you've got big companies like SpaceX that you can't invest in. So I think the fact that there is, stuff that you can see but not necessarily touch, it's a good question. I think the answer is, it probably starts with that thing we were talking about before, knowing what it is you're interested in getting, because there is so much that is available in the public markets, including access to private related funds, that it's worth just searching around on any platform, on Questrade's platform too, like once you've done your research online or what have you. So there's a lot of public options to get into the private markets, but where do you win?
Yeah, I mean, private market is certainly something we're exploring quite actively right now because the demand is growing, right? A lot of asset managers are moving into that space, but it is a riskier market, right? Because it's not regulated. So it's really important to recognize that before you participate on a lot of different avenues to invest in private markets. Sometimes you can't invest unless you're an accredited investor, right? So I think those rules sometimes exist to make sure that there is right amount of protection given to the investors. With that said, obviously, things like offering memorandums matter a lot, right? So that you can actually understand the financials of the company, right? Financial opportunities, what the trajectory is, who the leaders are of those companies. All those things matter a lot. One of the reasons that makes private markets a little bit riskier is liquidity, right? Sometimes, depending on how you invest in it, you can't actually take the funds out as immediately, or if there's a shock, because not many people are trading it, your value may not be as resilient as you see in a public market. So those are things to definitely consider. But I would say learning more about, understanding what you're going for, but also definitely doing the right research, understanding what you're getting into is definitely really critical.
And I guess I'd just add to the conversation that if there wasn't a sea of opportunity in the public markets, maybe it'd be worth spending even more time on this. I know there are certainly some high-profile investors, some very wealthy people who lean quite heavily into private. But you got people like Warren Buffett for years who have been saying, simple strategies involve, speaking of ETFs, maybe something that is tied to, let's say, the S&P 500 in the U.S., and you can do well over a long period of time. And that goes back to the first question we got today, which is time is everything in the markets, and being able to start early. If you are just joining us, welcome to this live stream. Global X and Questrade live on the Global X YouTube channel. We are fielding your questions on all things Canada. I'm Jon Erlichman.
And I'm Hwan Kim.
And certainly lots to talk about. We've got the Canadian economy in focus. The Bank of Canada just made its latest decision on interest rates. And I think a lot of people are very curious about the economy. So if you want to ask questions about that, or of course you can ask about investing. Hwan, we have a Questrade specific question. So I'm going to pass the baton back over to you for this one.
It's from Small Row 8973. Can Questrade provide some useful metrics for an investor's portfolio so we don't have to resort to third-party portfolio trackers and Excel spreadsheets, etc.? Things like alpha, beta, Sharpe ratio, sorting ratio, TWR and RR, etc. It's a great question and feedback. We've been getting this feedback a lot, actually, around how do we actually help you monitor and optimize your performance better. So our team's actually actively working on building out the right portfolio dashboard for our customers, which we expect to be able to roll out later this year. We do offer some good base levels of your overall P&L performance and others through our platforms, but we are certainly very cognizant that a lot of our customers, not just the beginners, right? People who've been investing for a while, really are looking for ways to keep track of their investments and how to optimize them. So stay tuned for this one.
And I'm just guessing here, but because we had this poll question earlier, and people can check out our poll. We've got the link in the description about what kind of investing you're interested in. Maybe growth, maybe it's income investing. We also asked about crypto, and I can see in our queue too, we even have some crypto questions. So we'll be getting to those. But I would imagine, depending on what you're interested in, and then what your portfolio makeup is, that does tend to influence the kind of products or tools that people are going to want to use.
So one of the things we're considering as we designed this is for income investors, as an example, what matters is the dividend performance, right? So because that's what they're really building out for. Whereas for a lot of growth investors, actually trying to understand, where they're over-indexed in, what are the things they can do to improve their performance matters a lot. And truth be told, I think a lot of investors are actually both. Right, they have some income portfolio and they have the growth portfolio. So how do we actually bring those together and look for those beta or gammas? I think will also matter a lot.
So we are talking about the Canadian market, and I'll just share a couple of stats because I love to share stats that sort of make up what is the TSX. Because there was that question about the TSX ETF story. Oh, by the way, we'll get our poll stuff in just a second here, but if people are investing in an ETF that is tied to the TSX itself, they might want to know what the breakdown of the TSX is. Because, especially if people are interested in growth, right? Canada has a lot of great growth stories, whether it's the business of Shopify, but financials, energy, and materials, which that makes up the gold sector basically, that's 33, 16, and 13% respectively. So just off the bat right there, if you're in a traditional TSX related ETF, that's where a lot of the investment in that fund sectors is tied to. And so I think that one of the reasons we've seen an explosion in ETFs that are a lot more thematic in nature as well is because you have the broader markets that have these themes that are different, right? And it's definitely a different theme between the TSX and the S&P 500. The S&P 500 that really is tied more to technology. Tech is about 10% of the TSX. So just understanding those rhythms, I think, to sort of answer that question are important. By the way, on the poll question, we have an update, Hwan. And so far people have been asking more questions around, or are more interested in growth investing. I believe about 60% of the respondents are showing more of an interest there. And then 20% income, 20% crypto. I feel like it is. It's a really exciting investing time. Everybody talks about the wide world of AI and technology that is, transforming business and the opportunity associated with that. But I think the good thing about having a conversation like this is to talk about holistically the markets, because again, you have huge opportunities out there from time to time. But then the rhythms of the market can always change. Yeah. One of the other things I should point out about the Canadian stock market, which I think is really interesting in a year where we've talked about, the rally in tech in the United States, is that you've got the TSX up more than 11%. At one point it was down 9%. And as much as people have talked about, Canadian markets maybe lagging the US markets, coming into this year, in 12 of the last 16 years, so going back to the financial crisis, the TSX had positive performance, and Bloomberg Intelligence had some stats around sort of the value opportunity in Canada. The idea that not only are there companies that make up the TSX, a large number, who are pacing to have better earnings growth, but they also trade at lesser valuations than the median S&P companies. So I think a lot of people are paying attention to that, especially after we've seen the run-up in tech. We have another question. Should we get into it? I think we might go for it. This one comes from Atlas 451. And the question was, what's your tip for someone who is intimidated to get into the crypto market, specifically with Bitcoin? I keep foregoing investing into the coin, but it keeps going up. Have I missed the boat, or should I DCA, dollar cost average, into Bitcoin moving forward and just accept the past losses of not getting in early? And also, Jon, I have been following you for a while. Love your videos. Thank you. Maybe we can make a video together, Hwan. Any books or resources that you guys recommend I pick up? Oh, I love that. So there's a lot to get in there. Should we start with crypto, maybe? I mean, I think that on crypto, well, why don't I give you a chance to sort of weigh in on sort of all the questions that on your platform are being asked about crypto right now?
I think we shared this on our Reddit earlier. We are actually working on our crypto investing. I mean, certainly we keep seeing the demand every day, but I think it's really important as we get into crypto that the right research is being done and it's not being driven by emotions, right? Because typically what we see, especially the customers who are trying to level up their investing, the common feedback they have is they need to control their emotions better, right? Because sometimes it's the fear, it's the greed, it's the FOMO that drives the investment decisions, and in most cases those are the wrong ones, right, in terms of how you get in. So specifically for the crypto market, I do think it's important that people do a lot more technical research, right, given that there's not as big of a fundamentals that you can look into compared to the stock market. But technical analysis, like looking at the charting, looking at the patterns, can help you at least understand what's happening in the market. I'd also recommend, and as we do in our equities portfolio, putting into the right strategies around putting in right stop limits, right? Putting the bracket orders. Those things really help you, get free of the emotions that may take over. Because sometimes you want to set the right floor, set the right ceiling, so you can actually get the benefits of the market moving, especially when it's volatile asset classes like crypto. But when things dip a little, maybe you second guess and say, maybe if I wait a little, it'll go back up, right? Yeah. So I think it's really important to actually look at different ways. And a lot of those in the stock market today, you can leverage our Edge platform, our advanced trading platform, to set up the right strategies for you, do the right analysis. And as we venture into crypto in the future, we hope to do the same so that people can actually make a lot more informed decisions going forward.
Well, and this is not financial advice, but I think if somebody feels FOMO, or they feel like they decided they didn't want to invest in something and it kept going up, if people are frustrated by that, or if, as the question asked, feeling intimidated, you're not alone. I mean, this is one of the youngest asset classes in the world, at give or take 15 years. Yeah. And let's be honest, really only getting notable market attention. I know sometimes we share the stats on how much one's portfolio would have grown if they were investing 15 years ago. Yeah. But I have to say, I was covering the market of Bitcoin 15 years ago, and the conversation was very different than it is today. So really, 10 years as an asset class that's sort of been starting to get that question, and maybe just the last couple of years that you've seen a lot more adoption. I mean, Canada obviously was an early adopter of ETF products around this, but especially with some of the US launches now, just seeing sort of more of that acceptance, if you will, in the traditional investing world. So I don't think people should be feeling intimidation. They should sort of accept that this is new. And again, not financial advice, but when I've asked people, where does crypto fit into one's portfolio? I have never heard anyone who said this should be 20 or 30 or 40 or 50% of your, right? Yeah. People just are looking at this the same way they look at equity ETFs or fixed income, or all of those different components of having a portfolio. And so, I think that's it's a good question to be asking. What also came up in that question was dollar cost averaging, which is a great thing. We can talk more about that. But as you were alluding to, whether you have limits, whether you have dollar cost averaging, a programmatic approach to investing is something to just think about, which sort of eliminates some of that emotional part. And books, there was a question about books. I love this question, Here's how I'll answer the question about books. I don't love textbooks, Juan. I get a little sleep. This is personally. I don't know
You're
about
not
you,
alone.
okay?
So, yeah.
So I'm always looking for like the personality in investing. And I mentioned Warren Buffett earlier. One book that I've always loved is The Making of an American Capitalist by Roger Lowenstein, because it talks about the life of Warren Buffett through more through his own story, and like the investing philosophy comes out in that. That's one I really like. Peter Lynch, who's sort of a legendary investor, since we're getting a lot of growth questions, has a lot of great books. Beating the Street is a great one. And I mentioned the financial crisis earlier. Andrew Ross Sorkin wrote Too Big to Fail about the financial crisis. I think when we're in a bull market, it's worth reminding people that you can be in terrifying bear markets as well, and the dynamics that go into that. Those will be my book ideas to our guest, or to our questioner. Yes. So we have some other questions we can get to, and just as a quick reminder to everybody tuning in, hello, I'm Jon Erlichman, and we are here on the Global X Questrade Live YouTube live stream with a Reddit component as well.
Yeah, and Hwan Kim from Questrade.
And so we've been fielding questions all related to Canada investing. You can ask us about the economic outlook as well, about the components of the Canadian stock market, about some of the nuances of investing in Canada, the product landscape, the tools, all of that great stuff. We have another question here from, I believe, PNS. NGL. Thank you so much for your question. Hey team, thanks for doing this AMA. I'm somewhat new to investing. What should beginner Canadian investors be thinking about in 2025, especially with all the market ups and downs? Kind of gets us into the volatility theme. Yeah. I'm blabbing away here, Juan. I mean, just sort of like when it comes to that subject of volatility, how often does this come up in your conversations?
A lot. So, I mean, we obviously closely monitor volatility in the market. What I think has been really interesting for the past couple of years, and especially this year, is Canadian investors have actually become quite resilient to volatility, right? Because in the past, when like a rapid dips happen, you would actually see a massive sell-off by retail investors, and that sometimes lead to a very bearish market that doesn't go up for a while. But lately, with all the shocks that are being created by different factors, there is a lot of resilience around people actually wanting to, obviously with their research, wanting to get in to actually take opportunities where those shocks are resulting in price drops, and for them to be able to secure at the right prices they seem fair. And a lot of those I think has been a really good support for the overall market. So the way I think we should hopefully think about volatility, because what we don't want is people doing this based on fears, right? Or doing this based on grids. So as you mentioned, bull market happens, but maybe it's not a bull market every day, right? And also bull market is never going to continue forever, right? Same thing with bear markets. Bear markets come, but also it's not a bear market every day, and it also will not, bull market will come again. So being able to actually understand what's really happening in the market and contextualizing probably helps, especially for those investors who are looking to kind of level up in terms of how they invest. It creates a lot of interesting opportunities for them to be able to taking advantage of. Again, going back to the reminder, not a financial advice, and we really do think it's very important for a lot of investors to keep learning more and keep looking at the right books, looking at the right videos, doing their own research and analysis. Always help you, I think, to become a better investor.
Well, actually, we were sharing some stats earlier, but I'm going to bring them up again as well for our early Canadian investor here, just again on how the TSX breakdown, just for some context. Because you've got certain sectors that have been standouts this year, like gold stocks are a great example. So materials have been the best performer in the Canadian market. It's one of the reasons why the TSX overall has had a very strong year. But they also make up 13% of the index overall. Yeah. So there is a large weighting towards gold stocks in Canada, more so than in the US market. That's definitely one thing to know. And it's also, it's an important part of the story of investing in the Canadian economy too, because there's a lot of interest in the gold that we mine here right now. So that's one consideration. I know we've been talking a lot about tech for the year overall, but actually over the last few months, you've started to see a lot more interest in financials as well. And again, one of the differentiators between Canada and the US, our financials make up more than 30% of the TSX. That is the largest single weighting. So again, if you're an ETF investor, buying something that's sort of tied broadly to the TSX, generally speaking, it's going to be more skewed towards that area. I mean, RBC, TD, CIBC Scotia, BMO, all of those banks are within the top 10 to 11 most influential stocks in our market, which is, it's a different component makeup than the US, where people talk about the Mag 7 stocks. So those are a couple of things worth considering.
It goes back to understanding what you're investing in, right? To make sure that even though, when you buy a TSX ETF, you're investing in the market, but to your point, the market has exposures to different sectors depending on what market you're investing in. So, depending on your needs, I think the right diversification strategy is really important. And I think that starts from actually taking a deeper look, right, and understanding what exposures you really have against the movements you expect in the market.
Yeah. One other thing I'll just add, I mean, I know we talk about these big moves for the Silicon Valley companies over the long term, but I was even just taking a quick reminder look at the past decade for Canadian stock market investing, and we've had our own tech success stories, like Shopify shares are up more than 3,000% in the last decade, but you've got companies like Dollarama, or a lot of the engineering companies like WSP, even the exchange operator, the TMX, that have had gains of several 100% in 10 years alone. So there are a lot of exciting stories to watch. That's not financial advice. We have another question we want to get to. This one's from RCN_Martech. Hello, thank you very much for your question. Is there potential in Canada where the economy has been heading versus the potential to become an energy power country? So I guess that's more a question around the potential of Canada's economy, which I always believe in the potential of our economy. Although I would say that, we're in a very interesting moment for the country. Trade tensions are high. That's opened the door to like a fresh conversation around where we want our economy to go, what kind of trading partners we want to have going forward, but also how can we leverage some of the best of Canada considerations, right? And we've got all sorts of natural resources strengths, energy, certainly near the top of the list, if not at the top of the list. And I think it's also a story about safe, secure, reliable sources of resources. Those are some of the things that have come up in a very complicated geopolitical world. So absolutely we have plenty of potential. And by the way, we have this opportunity right now to be distributing all these resources in more ways. That's one of the themes behind the infrastructure build out that's probably going to help the Canadian economy over the next few years. But we still do have to deliver. We have to live up to our potential. We've got a lot of competition with the United States as well. So a lot to chew on in that question.
I mean, we are a major exporter, but to your point, a lot of macroeconomic factors that actually impact that, right? What I think is also really important to note is we're actually probably a world leader when it comes to transitioning to renewable energies. Right, so I think about 17% of the energy sector in Canada is renewables, which I think is a very, very strong transition number. So, long term, I think that's another factor to think about.
Yeah, the only other thing I would add to that, that's a good point, is that if you're investing in the Canadian stock market, which has been at all-time highs, and you're seeing the headlines around the economy that, speak to a little bit of uncertainty, trade uncertainty, I think a lot of the investors that I have a chance to speak with will note that in a lot of ways, some of those key sectors are leveraged to the global economy. So investing in the TSX, again, this is not financial advice, the health of the Canadian economy is very important to that, but also the global demand for things beyond just tech is one of the key determinants and has been one of the fuels this year. Hey, we got another Hwan specific question here. So
is it a Todius? It's a cool name.
Yeah.
When will Questrade re-enable the API so we can execute order placement for UX exchanges? Great question. We are getting this request quite a bit, especially among our sophisticated investors who actually wants to code their trading algorithms on their own. So it is something we're definitely evaluating right now. There are some, obviously, one of the reasons why we're taking some time to get this right is to make sure that we're delivering this in a secure way so that it's not being misused by threat actors to compromise our security of our customers. So we're definitely taking the right steps to make this work. In interim, we also do offer API connectivity to platforms like TradingView, right? Where you can also code your own trading algorithms on top. So we, for now, we would recommend kind of looking at some of our partners to be able to do this, but definitely a feedback taken, and we're actively looking into it.
All right. I think there's possibly another question for you as well.
Okay, the next one is from Shoddy Lingonberry 4. Do you offer GBP or European accounts? So we do offer global trading through our trade desk. You can call in to get access to those markets, but we do. I don't believe we offer the GBP or European denominated accounts on our side.
All right, okay. And if you're just joining us, just a reminder that we are fielding your questions live here on YouTube and Reddit for this Global X Questrade AMA. I'm Jon Erlichman.
And I'm Hwan Kim.
And it's pretty simple, actually, if you want to ask us a question and you haven't yet. There's a link in the top right corner that you might see, which is our link to go and ask a Reddit question. It's go.globalx.ca/AMA. We have a direct link in the description here on YouTube, so you can click there, you can put in the question, and we will do our best to answer your great question. We've had so many great questions so far. You can even weigh in on our poll. We've been doing a poll this hour just to get a sense of who might be watching today, because obviously there's all sorts of investing questions around growth, income, crypto, and we've been fielding those questions on all of those subjects. Earlier, our poll had indicated that there were more interest on the growth investing side. There's a link for that as well in our description. Okay, I think we have another question that's more geared towards you, Hwan. It's how do you think about which types of customers are a better fit for DIY investing through a platform like Questrade versus working with a portfolio manager? What do you see in the numbers right now? Because I just to sort of jump in, I would say that the DIY investing economy, is arguably as big as it has ever been, because of the way by which people can learn about the markets through technology. Platforms are at your fingertip, and that, in a lot of ways, is changing the dynamics of the markets on a daily basis. But I'll give it to you.
Yeah, so the great news is we actually offer both, right? So we offer great DIY investing and a lot of advanced tools for customers who want to manage their own portfolio. But we also offer Quest Wealth Portfolios, which actually offers the lowest fees when it comes to your management fees, to be able to have a diversified portfolio if you don't want to spend the time taking control of your investment portfolio. I think one of the important factors as you look into this, probably on the portfolio manager side, would be fees, because fees actually eat into your returns, right? So you want to make sure that you're actually going for the right, portfolio manager and right portfolios that deliver the right risk and return profile you're looking for at an affordable cost, right? So that you keep accumulating your wealth. Another thing we're actually seeing a lot more is a lot of our customers who hold the discretionary portfolios with us, they also do DIY investing on the side as well. So these are not necessarily mutually exclusive in my view. It's a great way for you to have a very diversified portfolio and be able to add a little bit of more conviction-driven exposure based on what you believe is going to happen. So, and typically what we see is people who do that tends to have much higher performance, right? Because it really allows you to stay true to that diversified portfolio, the ethos.
Yeah. Probably also just makes you a smarter investor if you're being active yourself while also working with a professional.
Absolutely.
It just means you're living the world of the markets a little bit more. And I think that point about fees is a really important one. You know, at the end of the day, like we got questions earlier today about what you should be thinking about if you're investing or you're early in that process. You know, again, it's not financial advice, but a lot of people have to look inside and think about what it is they want to achieve. You know, we got questions about volatility. You have to ask yourself, like, are you interested in making a lot of money? Probably. Are you interested in losing a lot of money? That might indicate the kind of investments you're in. And then over the long term, the reality of fee. We've done lots of videos over the years about how that fee reality can add up for an investor. Especially if you're, you know, not even quite sure of what you're in. Like we've had some good questions today about what to think about in the Canadian market. There are so many specifics tied to the Canadian market you have to consider that are different. So if you have to figure out what it is you're buying, if you're buying an index, certainly it's valuable to know what you're paying to buy into that as well, because that can definitely make a difference over time. I think we have a different question from Shadi Lingamberry 4. Great handle. Thank you very much, by the way, for all these Reddit users who are giving us great questions. And if you want to participate as well, you can just click on the link in the description here on YouTube and put in a question. So this one is, what is the fastest way to accumulate funds for retirement? I would say, and again, this is not financial advice, the reality, this came up earlier, like the reality is, where are you in your investing time horizon? Makes a big difference. It also really influences the kinds of questions that people tend to pose, because, you know, I think that oftentimes, and this came up earlier too, like the belief that growth investing might be more suitable for younger investors, only because you have that time horizon. You know, if you want to accumulate funds quickly for retirement, you know, are you asking that question because you're close to retirement and you feel you need to play catch up? You know, or are you just starting out now and you really want to get started? We actually did. I've done a video on my channels just about that amazing compounding power over time. Like if just as a hypothetical, like if you're somebody who's investing on a pretty consistent basis, let's say from 25 to 35, and you're committing capital in a 10-year period, and then you have that amount fully invested until the age of 65, that it's remarkable when you quickly crunch the numbers on that there are sometimes people who invest starting at 35 and might end up investing on a committed basis for 30 years and end up with the same amount, maybe less than the person who invested directly for those 10 years, built a capital base, was able to see sort of, you know, consistent growth through that. So I think it just, you know, those are all the kinds of considerations that go into that.
I mean, I would echo saving regularly, early, probably is
helps,
a big factor into helping you accumulate funds faster.
All right, we have another question coming from Range Rocket, who is familiar with my channel. Thank you very much. Yes, if you're not a subscriber to Ticker Take with Jon Erlichman right here on YouTube, with support from the great team here at Global X, please check it out. This investor has been investing in ETFs, noticed the robo-advising products are these AI. What's the difference between the two? Which is better? You're the product guy, Hwan, so I think you should field sort of the general question. So you know, robo-advisors, like as sort of as a concept, can you explain that?
Yeah, absolutely. So what I mentioned earlier, the Questrade portfolio is our robo-advisor product, right? What that means is it's a very streamlined product where, depending on your risk appetite and risk capacity, it helps you identify, you know, what's the right portfolio that you can easily invest in, and that portfolio mix is that actually holds different ETFs underneath. So going back to your earlier comments around, you know, TSX alone has different exposures,
Yeah.
right? So if you actually want to do very long-term investing in a very diversified way, sometimes you actually need to think about, adding other ETFs, like other global markets, U.S. market, sometimes bonds, right, to be able to have a little bit different risk profile, cash and precious metals and others. So what robo-advisor platforms do is it basically creates different model portfolios that's comprised of a number of different diversified ETF products. And then the allocation of those vary depending on your when you actually answer a number of questions about your risk appetite, how much more money are you willing to lose in exchange for a return. Those things help you determine what's the right portfolio that you can invest in, and it's offered in a typically very cost-effective way. So there is a management fee on top of ETF MERs, but it's a very low spread, so you can kind of really get the exposure of the diversified investing through multiple ETFs without having to worry about rebalancing the portfolio, so on and so forth.
And on the AI part of it, I mean, at the end of the day, AI is being implemented into just about everything today, right? Like I would think for any, and I'm not speaking directly for Questrade or anything like that, but just AI's role in our life is growing rapidly. But I think again, like the simplicity of AI tools and helping people to get answers to questions quickly, to even think about portfolio modeling, like. Is that such a bad thing that people can get answers very quickly that are helpful to them? And I think that AI will just continue to play a large role in our life, which means it's going to continue to play a large role in investing. In which way probably depends on how you invest and what you're looking to do as an investor. But AI is something that allows for even like a lot of the traditional components of managing a wealth portfolio to be done much more effectively. And then there's the component of AI which is around investing in AI. Like one of the first videos we did on my Ticker Take channel on YouTube was with some investors who have implemented AI into their stock picking strategies. And it's still early for them, but I think it is a reality that we're going to see a lot more implementation of these kind of tools and how people invest, and it's a good thing to watch.
And just specifically on the robo-advising product, they're not managed by AIs, right? They're managed, actually, the allocations are set and maintained by professional licensed portfolio managers. But with that said, we definitely notice a lot of our customers now leveraging AI to actually do deeper research, look at your investment, even like your portfolio mix, and to help you make better decisions. I think just thing to watch out for is there are some hallucinations that happen with as many AI tools. They're getting better, and different platforms probably have different strengths in terms of what it can provide you. So, being able to always kind of fact check and then sense check the answers you're getting is probably also a really important thing to do.
All right, it's a great question. Thank you for that one. Let's keep going with the questions here as our Global X Questrade Live AMA on YouTube and Reddit continues. We got a question from Opening Dog 417 who wanted to know, are you able to unpack what's happening in the Canadian real estate market and how its performance compares to the stock market? As a young person in my late 20s, it's hard to imagine a world where I can afford a house, and wondering if building wealth through stocks can be as advantageous. So I think one of the reasons, is a great question, and this is not financial advice, I think one of the questions that we have seen a great desire for people to take on do-it-yourself investing strategies, which we were talking about, is because money matters. It matters to people in a world that sometimes feels unaffordable. And specifically in Canada, the reality is that the rise in housing prices over the last 20 years has made owning a home challenging. I was looking at some stats, and don't hold me to these, but over the last give or take 2 decades, the fact that income growth, maybe it has doubled, but the average price for homes is almost like quadrupled, right? So there is on average a younger generation that feels frustrated by that dynamic. So I don't think anybody should be surprised that you're seeing a lot of young people who are very interested in putting money to work in the stock market and to build wealth that way. By the way, there are also ways to invest in real estate through the stock market. We were talking earlier about the way the TSX is sliced and diced, and there's everything from the ability to invest in companies that are directly involved in residential housing to companies that operate shopping centers across the country to the theme of if you want to classify them as real estate or health, some of the retirement home operators that are leveraging the fact that we have an aging population and there's interest there too. So I guess it almost gets me to like a philosophical question around are you looking to invest in real estate for returns? Because you can do that in the stock market. I think this question is just as much rooted in the fact that we sort of have it in our nature that we would like to own a home, maybe for financial reasons, but also just because it's kind of a societal norm. And if you have to put a lot of capital to work to make that dream a reality, what's the best way to apply capital to build wealth? I mean, these are really big questions for people to consider.
I mean, anecdotally, I totally empathize with this, and I personally am frustrated as well, because I think if you look at the Canadians versus Americans, I think a larger proportion of household income is spent on housing, right? And I think anecdotally, there's a lot of good stories that actually suggest that a lot of Canadians actually look at real estate beyond just their family asset into an investing asset, right? As they think about retirement, so on and so forth. Compared to in the US market, a lot more of that is done by the stock market. So I think it certainly is a point of frustration for a lot of people. I think one of the interesting asset class to look into probably would also be precious metals, right? Which actually have a little bit different characteristics. Again, not a financial advice, but precious metals have different characteristics in the stock markets, right? Especially with the actual, whether it's gold or silver as being held at the back. So sometimes that can also be, and as you alluded to earlier, we saw some remarkable growth in gold prices over the past, decades. Those can also be a really interesting vehicles. The other obvious thing to point out here would be taking advantage of the right tax advantages, right? So first-time homebuyers account, RSP, as a way to really be able to grow your seed capital into real estate definitely is helpful. Obviously, we also offer precious metals investing, which there's some more exciting stuff you guys can expect over the next couple of months on how we're going to evolve that space. But that also, you can put those in your RSPs and first-time homebuyers account, which actually helps you think about right asset allocation. You mentioned real estate exposure to ETFs. So one thing to mention on the REITs, right? A lot of the exchange-traded real estate investments. When you look into those as a suitable way to gain exposure to real estate prices through the stock market, I think it's very important to make sure that you understand what those funds actually hold, because sometimes those funds actually hold not just residential real estate, but also commercial real estate, which behave very differently than the residential real estate. So again, being able to do your little bit of homework to understand what's held at the back is always going to help you achieve your outcomes that you're looking for.
And Global X has its REIT ETF as well, the Global X Equal Weight Canadian REITs Index ETF for some of that exposure. A little context on the Global X story. I think one of the other things, you mentioned Canadians and their exposure to the housing market. It is an important thing to consider. Like the Bank of Canada has been keeping interest rates on hold for several months, but I think when they think about what they're going to do going forward, one of the considerations is that you've got a huge percentage, according to industry stats, of the mortgage market where mortgage renewals will be taking place over the next 12 to 24 months, right? So we have a lot of leverage in our economy to real estate. The Canadian economy has navigated through the trade uncertainty quite well so far. But the thing we always hear is, okay, well, we'll keep eyes on the jobs market, which as of June was performing quite well. But if all of a sudden the employment picture changes, the immediate question we have in this country is, what does that mean for housing, right? So, I think you could probably ask the same question with the outlook for housing prices that people tend to ask with, some of these AI stocks that have had big runs. What if, or that, or this? And I think at the end of the day, a lot of this stuff just comes down to the capital that people have to allocate towards that, right? Like, the reality for a lot of young Canadians is if you're lucky enough to sort of lean on, let's say, even a family member to get that down payment going, there's a lot of evidence out there, and I don't get into the specifics, it's not financial advice, that if you're in a position to buy a home versus rent a home over 10 or 15 years, that's going to make quite a difference in terms of, seeing something as, an asset with an ROI versus capital that's going out the door. But given where home prices have been, as we said earlier, no surprise that we've seen people that have been very focused on the stock market. We have another question. This one is a Hwan question. I guess it's a Questrade question. Go for it.
Yeah, it's from Shawty Lingerberry 4 again. When will you have crypto trading on your platform? I hate having to use another broker for that. Thank you for hating other brokers.
No hate here. We're all love, one big community.
We're working through our crypto. Obviously, the big thing of the crypto market is we do have to do it in a way that's compliant to the regulations, right? So we're working with the regulators to make sure we're doing this properly, to make sure that we're giving you the same level of confidence and trust that you get with us with stock trading and ETF trading. So it is in the works. We're hoping sometime next year we'll be able to deliver a really good crypto trading experience to you next year.
Okay, something that we'll be watching. And by the way, it's been great to get everybody's questions so far today. Thank you so much for your continued participation in this Global X Questrade live AMA, live here on the Global X YouTube channel and live on Reddit. We did get a general question about trends that are shaping how Canadians invest in 2025. Look, I would say that the rhythms of the market tell us that a lot of people have some big brain thinking around the world right now, in the sense that, like, what has dominated this world? Geopolitical and trade tensions and, like, massive government deficits. You talked about gold. You just got a question around crypto. One could make the argument that people who believe in bullion or Bitcoin are people that just have a belief that if governments are spending a lot of money and squabbling and entering, into fights with longtime partners, that maybe that's something you should continue to watch. Speaking of fighting, the global tensions have led to a lot of interest in the defense sector. On my Ticker Take YouTube channel, we just did a full video about some of the ways people have been investing globally in defense. And Canada actually benefits from some of that spending too, because we've made our own commitments. That's another big theme. And then, of course, is the AI theme, which is a pretty obvious one. What about trends you've been watching?
Yeah, I mean, at the customer level, I think we're definitely seeing that a lot of customers embracing volatility, right? So, because all those factors are leading to market to be a lot more turbulent. I think we're seeing a lot more of that week over week, right, in terms of what's happening geopolitically that's impacting the market. But again, like unlike in the past, instead of where it's consistently going in one direction, we're actually seeing more volatility in the market. I think something for a lot of investors to be aware of, right, when you're actually entering the market in these seasons, or when you hold portfolio, there's a lot of volatility in the market. So be mindful that how that can actually impact your portfolio. And for those who are interested, I think doing the right homework, doing the right research, doing the right analysis can hopefully unveil some opportunities for you as well.
I think we can probably squeeze in one or two more questions this hour. The questions have been great. There was another question about the big, or I should say, on that. I guess obviously we're talking, but the big beautiful bill in Washington and how that impacts how Canadians should invest. I think that we have seen people investing in the market solely because there's a lot of capital being spent. So as much as you could see people who are concerned about the size of deficits and maybe leaning into metals or cryptocurrency as a result of that trend, the fact that you're seeing spending, by the way, big spending plans here in Canada as well, there are definitely some big impacts on the Canadian investing landscape from that as well. Would you agree?
Yeah. I think those are great points. There's not a lot we can actually provide financial advice.
Oh
or
yeah,
the projection about the market.
No,
given
this
our
is it's not this is not it's not a session for financial advice, but it is an important time considering that the Canadian stock market has just been chugging along. I mean, I was even looking at the TSX moving through 26,000 this year, 27,000, not too far from 28,000. A double-digit percentage return, but also just the fact that we have seen. I was saying the stats earlier, upwards, according to Bloomberg, 12 out of the last 16 years coming into this year that were positive. Maybe the big beautiful bill is an opportunity to also talk about, the big beautiful opportunities in the Canadian stock market, which I think people have been leaning into. And you talked about, diversification in a portfolio. That's perhaps one of the things that Canadians are able to leverage more than a lot of investors around the world. Even if you just have straight exposure to the TSX, you're getting a different flair, a different makeup than you would from just being invested in the S&P 500. So you almost by default have that ability to be sort of leaning into some of the mega tech plays by being invested in Canada, and maybe people are obviously looking at investing in the U.S. market as well. But I think these have been some really great questions that we've been able to get so far
I think
today.
it's just the fact that these questions are being asked is a great sign, right? Because it actually means a lot of our customers and investors are looking into what these macroeconomic factors actually mean for my portfolio.
Yeah.
Right? And I think a general theme today we talked about was understanding those probably is a really, really great first step for somebody to get into investing or to level up in their investing game. So, I hope they continue to watch your content and watch our content.
Me too, yeah.
Right? Keep getting advanced on these things.
Absolutely. Yeah. All right, well, this has been great. Hwan, it's been such a pleasure to spend the hour with you.
It's been fun. Can't believe it's been an hour.
Oh my gosh. We also can't thank you enough for tuning in to this Global X Questrade live AMA here on YouTube and of course on Reddit as well. You should be sure to check out Reddit for more of the discussion if you're interested. By the way, Global X will be hosting more of these kind of forums, so if you miss some of what we've been able to do today, you can subscribe to the Global X newsletter. That is in the description here on YouTube. If you want to get notified to upcoming sessions, anything on the Questrade side to stay up to speed on what you guys are up to.
Yeah, we also have subreddit, so please
go.
feel free to join our Questrade subreddit as well, where we post a lot of product updates and what's going on. If you're interested in us doing more AMA as well, please leave comments below. And I'll make sure I pass on to our marketing team to keep going. It's because it's been a great experience.
Yeah, it's been good. And if you're not a subscriber to the YouTube channel that is Global X, please do that now. It's a great place to get all sorts of content, whether it's this live session or our market moves videos. And you can also check out my Ticker Take with Jon Erlichman YouTube channel. We have a lot of fun there too. Thanks so much for joining us today. We'll see you next time.
Thanks, everyone.